Hey traders, Todd Gordon here. What's going on? Welcome to the free video. It is now last day of March 28th, 2018, and market ugly close here. So hopefully you saw the free video yesterday. So we started to peel off some of the shorts today. I think we're still very much contained in a range. I don't think we're looking at a significant top yet. I think we might still be in this kind of triangle and a fourth wave. So we've begun to sell off. And what I'm looking at here from the Elliott wave point of view is a possible wave 4 triangle that makes basically 2018 a complete nightmare for investors. For traders like you and I, it's going to be awesome. It is awesome so far. So I am a little reluctant to take B of this triangle, which we'll trace out like this, and put it at today's top. I am concerned that it might be something like this. It might be sort of a false break on the downside. I'm not sure yet. We are short. We did take some shorts off today in the event that that does happen. And then from an Elliott wave point of view, it is possible, and I have another count, that the top is in. And this was a wave 2 top, and the market's about to get crushed. I don't think that's going to happen right now. I'm trying to be a little bit more conservative, not call the top of this market, and just ride basically the move down to about 2,600 to 2,500 in the S&P. This count says we are at a top. The one that I'm trading right now still says we go lower, but the downside should be limited to about 2,600 to 2,500. Then we should get a bounce. Basically, I don't care. For all intents and purposes, what I'm trading right now is to take advantage of the next 1 to 200 points on the downside. So we had a butterfly on. We took it off today. Bought it for $11, sold it for $13, so that was really good. And then we do have another SPX butterfly over here. This is centered around the 2,700 strike, so that guy did well. We put an Exxon trade to work. Crude oil inventories came out. I'll show you that trade. We have Amazon on the long side. That guy's acting very well in a down tape. Amazon is really doing well. So here's here's crude, and then I'll take you over to the bond market. So crude inventories came out, and it was interesting. They came out at a really vulnerable situation, very vulnerable spot for crude oil. I see crude rallying in an ABC zigzag, which is an Elliott wave correction, and then we basically broke out of an ending diagonal, which is an even more bearish pattern, and we're beginning to move lower now on the downside. This spike was crude oil inventories, but the high had already been put in. So I think the response either way was going to be lower. We put the trade on today in Exxon. Exxon is it's the largest energy stock out there. And it was very much underperforming on the way back. Where's Exxon? Right here. So if you take a look at this chart, this is a pretty cool chart. Really nice ABC zigzag, A, B, C. We failed inside of resistance. This is a broken trend line support that now offers resistance. I mean, all sorts of things that are not very happy in this Exxon trade. So we put this guy to work here, and we also did another butterfly. We did a 6 April. We did a 71, 75, 81 put spread, or sorry, put fly, and the risk profile looks like this. So we are trading about 75. If we could start settling into the 75 to 74 region, this is going to be where we're going to start to take the profits on Exxon. And if it wants to continue to go based on that count, we're going to head significantly lower. Now, the other market that I want to focus on is bonds. Bonds are really, they tried to sell off when Jerome Powell came out and said, like, we might have 3 hikes this year. And again, I give credit to Jerome Powell for saying that, with the stock market not at all-time highs. As every Fed governor or central bank governor likes to talk about raising rates with stocks making a new high every day. And when that stops happening, usually they scale back that hawkish commentary. But we didn't get as much of a downside response in bonds following Powell. And then today, we're starting to get a move up, and that's completely fine. I'm not going to ask bonds to continue to drop because we're into wave 5 support. So at this point, I expect bonds to start kind of assuming a safe haven flow kind of situation and give us a sellable ABC zigzag up in wave 2, and at that point, that's when the new short setup will come in bonds. So I expect bonds to continue to move higher. We're tracking setups in gold, dollar, crude oil. We put that trade on, so lots of cool things happening. The other thing, guys, is we do have the Elliott Wave webinar tomorrow. Elliott Wave International is putting this webinar on. As you know, our two companies are working very closely together. We have a tight co-working relationship, and they're inviting their customers. I'm inviting mine. It's a big one. I'm working hard on this presentation. So here it is. The link should be below this video. So it's going to be a free webinar here. Going to be tomorrow at 2 p.m. Eastern time, 2 to 3 p.m. So in this session, guys, I'm going to be talking a lot about why I love Elliott so much. There's a lot of preconceived notions out there. There's a lot of things that you may have heard that it's too subjective to be of any use. I'm going to address that. I'm going to have a good, frank conversation with you. I'll show you why for me it's just an amazing way to get context, to control your emotion, to have a game plan. And for options trading, it's wonderful. When to buy options, when to sell options, when to put butterflies on, vertical spreads. So I love doing that. So we're going to talk about all that. And most importantly, just EQ, emotional intelligence, right? How to get the mind right. And for me, Elliott Wave is an amazing way to, again, get context in the market. So I'll show you my top setups that I'm using right now to trade this market. Had a really nice day. We were positioned short for the initial push down. Covered it. We're short again. We're covering it. So knock on wood. It's been fun. And Elliott is just, it gets better as volatility goes up. And that's generally the case for all technicals. So it's looking pretty good. So we'll leave it there, guys. See you in the webinar. Link to sign up will be tomorrow, 2 p.m. Best of luck. See you soon.